The U.S. economy grows at 1.1% in the first quarter, well below estimates. Wall Street, however, rallies led by the Nasdaq as Meta surges over 13%. The Dow and S&P 500 also see their best day since March, while Amazon dips after hours, posts its cautious commentary on the cloud business. Stocks in the Asia-Pacific trade largely higher on a strong handover from Wall Street. The street is now keenly awaiting Bank of Japan's policy decision. The SGX Nifty 2 signals a positive start for the Indian market. Wipro delivers a weak fourth quarter and guides for negative growth in Q1 FY24, while the board also approves a 12,000 crore rupee buyback. Tech Mahindra's deal wins slump while margin comes in at a 23-quarter low, while Axis Bank delivers better than expected numbers despite higher provisions for the Citi acquisition. And fourth quarter numbers from Ultratech Cement to be closely tracked today. Realizations are likely to largely be flat on a weak pricing environment, even as margin expansion is expected. Godrej Consumer inks a deal to acquire Raymond's FMCG business for over 2,800 crore rupees. The acquisition is expected to enhance Godrej's presence in the deodorants and sexual wellness categories. Hi guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we have for you. There's lots that has come through from the US market. And, at least on the earnings front, it is very positive. We saw that big tech-led rally on Wall Street. The Dow and S&P also clocked in pretty good gains for the day. And on the back of that, you have Asia, which is definitely starting off well. So we're seeing gains across the board there. Actually, what's doing the best is perhaps the Hong Kong market, up 300 points right now. So the Hang Seng is up 1.5%. You have Taiwan seeing a gain of 1% as well. You're seeing, the gains only pile on as we go through the opening minutes of trade. Kospi is up another 0.6% after the move that we saw yesterday. Across the board, it's looking good. The only market in Asia which is seeing just a little bit of red is the Straits, but otherwise it's, like you can see on your screen, a very good start for the Asian markets on the back of that good handover. The SGX Nifty will come up for you. It is indicating a good 70-point higher start for our own markets. This is after we closed yesterday also 100 points in the green. And so let's see, it looks like the start will be good, but it will be interesting to see how the rest of the session really moves. Let's also talk about the US markets now, because Wall Street ended yesterday's trading session very strong. The Dow was up 524 points. The S&P 500 climbed almost 2%. And we had the tech-heavy Nasdaq, which was the big outperformer. It saw a 2.4% jump at the end of the trading session. So the stocks, remember, rose despite what was a weaker than expected set of GDP data that came through. We saw growth of only 1.1%. This is for the first quarter. And it could imply to some investors that the Fed could soon wrap up its tightening campaign. So that's also something that aided the rally. The Fed is, remember, slated to announce its next policy decision next week. So that is something that we're tracking closely as well. So that's what really came through on the macro data front from the US. But on the earnings, we also had online shopping giant Amazon, which reported its first quarter results in the, in post hours yesterday. And the company, while they reported a better than expected revenue growth that beat analyst expectations, what was tough, and, after the stock initially rallied, we saw a dip. This is because they said that the cloud business could continue to see some kind of dip in growth, and that would remain under pressure. So that is what really hit the Amazon stock later in the trading session. But with that, all right, that is some important opinion that we're tracking, but let's now bring you the trade setup as we see it this morning. We have our research team joining in for exactly that. Vivek, Nigel and Surbhi are all with me now to bring you the trade setup and prep you up for this trading session. Guys, very good morning to all of you. Vivek, coming to you first, you were just going through the global setup. That definitely looks positive this morning.
Well, you're absolutely right. It's been a very, very strong handover. A couple of things to watch out for. We've ended the April series on a very strong note, and we're going to, looks like we're going to set off the May series too on a very strong note. But just having a quick look at how the global markets fared yesterday. Very strong set as far as US markets were concerned. Nasdaq up almost 2.5%. Like you mentioned, the global tech earnings coming in much better than what were actually very soft analyst estimates. European markets ended trade largely unchanged, very mixed set of cues as far as Europe is concerned. Crude oil prices, ended largely flat and a negative bias. However, crude oil prices have significantly, cooled off from the recent highs. So Brent futures now trading closer to just a $78 a barrel marker. Now, when you're talking about Indian markets, ended the April series on a 2-month high, so very strong handover, almost a 1,000-point rally in the Nifty as far as the April series was concerned. IT stocks is something you need to keep an eye out for. Yesterday, IT pack outperformed. A lot of earnings have come in the IT space, post market hours yesterday, so that entire pack will be in focus. And also, when you're talking about a few select banks, Axis Bank also will react to its numbers. Asian markets on the back of strong handover from global cues, have started off on a strong footing. SGX Nifty 2 is indicating a gap up start to the May series.
All right, Vivek, thanks a lot for getting us all of those cues. Gap up start. Let's see how the rest of the session moves. But let's also talk about the individual stocks that will be in focus in today's trading session. We have Surbhi here to fill us in with all of the very important stock-specific action that came through post-closing yesterday. Surbhi.
Hi, good morning. Thanks for that. So I have quite a few earnings on my radar this morning. The first one is Axis Bank, where the numbers were better than expectations on many parameters. The net interest income was up 33% on a year-on-year basis. They have reported a net loss of 5,700 odd crores versus a profit of 4,120 odd crores last year. Moving on to Wipro, where the revenues were weak but the margins were maintained. The dollar revenue was up close to 1% and the EBIT margins were maintained at 16.3%. The board has also approved a 12,000 crore buyback. LTI Mindtree, the revenue growth was lower than estimates, but the margins were slightly better. On a sequential basis, the constant currency revenue growth of 1%, but the EBIT margins came in at 16% versus 14%. Emphasis, it was a weak quarter. The constant currency revenue was down 5% sequentially, and the EBIT margins were maintained at 15%. Indian hotels, very strong set of numbers. The revenue was up 87% and the EBITDA was up nearly 3 times at 536 crores. Apart from that, Godrej Consumer and Raymond will also be in focus. As the CNBC-TV18 news break is confirmed, Godrej Consumer is going to acquire Raymond's FMCG business, Raymond Consumer Care, for 2825 crores. And lastly, PI Industries will be in focus as the subsidiary PI Health Sciences is going to acquire 100% stake in TRM for $42 million.
All right, Surbhi, thanks a lot for bringing us all of that individual stock-specific action. Let's also talk about cues from the futures and options space. Nigel joins us for that. Nigel, as much as we've been complaining about a very flat session the past couple of days, the whole of April has been quite good.
What a stellar April it was, Pavitra. I mean, when you get close to around 5% returns in a single series, that's telling you how good it was. And you pull up the intraday chart of the Nifty, we ended the series at the highest point that we have seen. That's telling you how good the series was. And after losing out for 4 straight series, well, we had a good big green series out there. But how is May series shaping up? Well, let's give you a couple of cues. The shorts from the FIs are around 58-59% odd. I'll tell you what, we'll miss these shorts. At the start of the series, it was 91%. And that was one of the big reasons that we did see the market surge up, because the shorts got stuck on the wrong side. On the option side, well, they are buying as well as writing equal amount of calls as well as puts, so no direction coming in there. But let's look at the options data. Now, yesterday in an uptrending market, you had the 17,800 and the 17,900 put between them. They added close to around 90 lakh shares or thereabouts. So there was aggressive writing that was seen at both those two levels. On the downside, that 100 DMA, that becomes the near-term support zone, close to around 17,800 odd. On the upside, though, 18,050, 18,100 odd. I think out there we'll see some supply coming in there. I was looking at the recent high that we saw in February. It was 18,034. So that's why that is a bit of a resistance zone. On the Nifty Bank, being the star, right? Even yesterday it surged up in late trade. So out there, there's a tussle on which side of 43,000 it's going to swing, because you had a fair bit of action at the 43,000 call as well as the 43,000 put. But let's plug in a couple of numbers. Since the 43,000 call was seeing a fair bit of writing, 43,300 becomes a bit of a resistance zone. On the downside, though, going by the kind of writing that we've seen, and 42,600 was a bit of a resistance on the way up. So on the way down as well, that becomes a bit of a support zone. SGX Nifty suggesting a bit of a green start. But I'll tell you what, after the kind of rally that we've seen, we got big queues next week. You got a long weekend as well. I think taking some money off the table before the end of today will be a prudent strategy on the index. Stay long, but maybe taking some money off the table will be good. Back to you.
All right, Nigel, thanks a lot for taking us through all of those cues from the futures and options space as well. With that, it is time for our first short break on the show. But when we come back, a whole host of big companies have reported their fourth quarter numbers after ours yesterday. So we're going to line up all of the highlights on the other side. Welcome back. You're still tuned into Power Breakfast. As promised, let's talk about the big earnings that came through. We had IT, big companies post their results. Wipro is the first one. Reema's here to take us through the numbers. Reema, quite disappointing here.
Yes, so the revenue growth has come in at minus 0.6%, which means revenues have fallen in Q4. But this is largely within the company's guidance. The company's guidance was that in Q4, revenues will decline by 0.6 or go up by nearly 1%. But the problem is their Q1 guidance. For the June quarter, the company is guiding for a minus 3 to minus 1% growth, which means even in the best case, your revenues are going to fall in the June quarter compared to the March quarter. The company has managed to defend its margins at 16.3%. The problem is what the company told us in the press conference and in the interview is that many of the banking and financial clients and tech clients are seeing a reduction in their discretionary spend. And this is generating a lot of uncertainty, which is why the company is guiding for growth to come off in the June quarter. But the silver lining in the numbers is the buyback. It's a large buyback, 12,000 crore of a tender buyback at a price of 445 rupees per share. This is a near 19% premium to where the stock closed yesterday. And remember, the Wipro ADR, in fact, closed higher. The Wipro ADR was up 4%. A combination, perhaps, of the fact that, there was a buyback and plus NASDAQ itself rallied close to about 4.5%. So numbers are very weak. The Q1 guidance is dismal, but the ADR was up 4.5%. So let's see how the stock fares today. But in the meanwhile, let's listen into what the management had to tell us earlier.
In some sectors, in some industries, certainly banking, financial services, also the technology sector, where what we are observing is that there is a certain reduction, slowdown of the discretionary spend. And that is, definitely generating a little more of uncertainty on our top line for quarter one. Not one single project or got cancelled, not a single project, there's I would say there is not one event that would have any material importance to the guidance for Q1.
All right, that is the management. But let's also listen. Let's also tell you how Tech Mahindra's numbers have fared this time around. Reema is still with us. Reema, once again, quite a disappointing set from this one as well.
Particularly, it's the margins which are very disappointing. So the revenue growth has come in at 0.6% on a quarter-on-quarter basis, but their EBIT margins are at 12.2%. which is a decline of 80 basis points. And this is what the street is worried about. Tech Mahindra's margins, there was an aspiration to hit 15%, but look where the margins have come off. There is also a decline in the profitability and a sharp 14% fall in the profitability because A, the margins have come off, and B, there is an impairment charge of nearly 212 crore. The other disappointing factor about the numbers is that the deal wins have come off. The deal wins are down 26% on a quarter-on-quarter basis and down 41% on a year-on-year basis. They were holding up in the range of $700 to $1 billion in terms of deal wins for the last many quarters. But this quarter, the deal win number has come in at $582 million. Back to you.
All right, Reema, thanks a lot for taking us through all of the highlights. That is Tech Mahindra's earnings. In fact, remember, we will be speaking with the management of Tech Mahindra, MD and CEO CP Gurnani, as well as CFO Rohit Anand will be joining us at 8:35 a.m. today to discuss their fourth quarter earnings. So do tune in to us at CNBC-TV18. That's what we're tracking from the tech space. But from that, let's move on to banking now, because the other big set of earnings that came through were from Axis Bank, reported a better than expected set of fourth quarter numbers. So Abhishek is here to break all of them down for us. Abhishek.
Well, Pavitra, as you mentioned, Axis Bank has reported earnings and their business profile much better than expectation on many parameters. So to begin with, the watch list is now at 0.65% of the loans. It's at 28 quarter low. In absolute value, it's declined by 22%. Deposit momentum is at 15.24% YOY and about 11.65% sequentially. The low-cost deposit share, that's inched up YOY and quarter-on-quarter. The advances growth is at 19.5%. 10.5% YOY and about 10.92% sequentially. So in these business updates, or the business numbers, you have all the cities numbers as well. So it's an integrated number which has been reported this time. Net interest margin is at 4.22%. Now Phillip Capital was working with a number of 4.16%. Provisions were at close to 12,800 crore. Remember that in this there is one-off expenses with respect to Citi of close to about 12,500 crores. Asset quality, the total slippages came in at 3,375 crore. Phillip Capital had estimated a 4,000 crore slippages. So a lower than expected number is good sign over there. Annualized slippage ratio of 1.6% is perhaps at a 10-quarter low. The gross NPA ratio of 2% is 28-quarter low, and net NPA ratio of less than 0.4% is at 31-quarter low. In terms of P&L, the NI is slightly below our poll. However, the losses are in line with our poll. Back to you.
All right, so that is on Axis Bank's earnings. Abhishek, thanks a lot for bringing us all of those highlights. But the other big piece of news that we were telling you about earlier as well is that Godrej Consumer Products has announced that it will buy Raymond's FMCG business, Raymond Consumer Care, for 28.25 crore rupees. Now, this deal includes Raymond's Consumers trademarks brands like Park Avenue, just the FMCG bit, KS, Kama Sutra, and Premium to GCPL. It has, however, retained the Raymond brand of fragrances. So my colleague Yash asked the management of Raymond about the rationale behind the valuation. Let's listen into that chat.
At the Raymond Group, we believe very strongly in managing and nurturing our business. And in our demonstrated performance, every single business, we have demonstrated growth, margin improvement, and that reflects in the value creation of our business.
Would you say it's a good deal for Godrej Consumer or a good deal for you?
Nobody does a deal if it's not good for him. Okay, you must look at a win-win. 100 rupees in your hand has a different value than 100 rupees in my hand. Should I have got 300 crores more? Yes, I could have got 300 crores more. But by getting 300 crores less and getting the deal done, see what I will achieve on the demerger. If I get that done, I won't make 300, I'll make 500 crores more. From their point of view, you might think they've overpaid, but they are smart business people. They know what the potential is. Sometimes you don't pay for the product, you pay for the potential. And if they just take it and plug it into their system, they have a growth plan. And they're very smart people, they've done extremely well, I know them extremely well. So I think this is genuinely and I passionately say, genuinely a fantastic win-win deal.
All right, GCPL is very well aware of the potential, and it is a win-win for both parties. That is the word coming in from Raymond. But with that, it is time for a break on the show. On the other side, we're tracking all of the cues from the commodities market. Stay tuned. Welcome back. You're still tuned into Power Breakfast. Let's talk about what's going on in the world of commodities, since we've taken you through all of the equity market action already. Manisha joins us with that update. Manisha, what are you tracking this morning?
Pavitra, thank you for that. I'm looking at the crude oil prices, where we are headed for a second weekly decline. Previous week decline was 5.6%, and this week's decline has been 4.5%. So we clearly have declined by nearly 11% in the past 2 weeks itself. There are global demand growth concerns. While Russia says that the global oil markets are balanced, but with the kind of economic data that we are dealing with, where you are looking at weaker manufacturing data from US and China, the consumer confidence numbers have declined as well, and the markets also are looking at new home sales, construction numbers, all of that continue to decline. So the weak economic data clearly converting into weaker global demand growth concerns for crude as well. And that's exactly what you are seeing in metals also. Copper is now trading at near 4-month lows, headed for a weekly decline as well. There are weak demand concerns coming in from US and China, and also the China Golden Week holidays begin in the next week. So there's going to be even lesser demand coming in from China. And in any case, because of the strength in US dollar and ahead of the US Fed and the ECB monetary policy meeting, you are looking at lower participation and even weaker trends.
All right, Manisha, thanks a lot for getting us that quick update. So the fall that we're seeing in crude oil prices, as well as some of the metal names, continues like we are seeing it this week as well as last. But with that, we're going to wind down in this edition of Power Breakfast with the news that Asian markets are well in the green. The SGX Nifty indicates a gap up. Thanks for tuning in. Bazaar Morning Call up in 2.